funny money,
Yeah.
actually. I saw a headline. I saw a couple headlines here, and I can't verify these things, but the number one was that Elon's now $1 trillion estimated net worth means that Jeff Bezos is closer to the average American than he is to Elon.
Peter, hello. So good to see you and welcome back, everyone. Let's talk about what everybody is talking about today, which is, of course, SpaceX. We want to talk about whether it's an opportunity or an overpriced rocket. So there's a lot around SpaceX right now, especially considering the recent IPO with massive valuation targets, increased retail access, and heavy promotion from major brokerages. But history tells us hype doesn't always translate into investor outcomes. So today we're going to break down what you need to know and what you need to consider before jumping in. So there was a lot, so much excitement around the IPO targeting 1.7 trillion, which it hit right. That was the valuation. Raising 75 billion was a goal. It seems like funny money to me, Peter. What's your reaction to that?
It is funny money, actually.
Yeah.
I saw a headline. I saw a couple headlines here, and I can't verify these things, but the number one was that Elon's now $1 trillion estimated net worth means that Jeff Bezos is closer to the average American than he is to Elon. So that's nuts. But
Yeah,
that
it is.
also through the stock options that he was granting to employees along the way, that some 400 additional millionaires were created as a result of this IPO.
Wow.
And able to realize that wealth by then turning around and, if they so chose, selling their shares that they had earned as a result of working for SpaceX on the open market, which is what an IPO is. It is the initial public offering, the first time that average traders and investors have access to buying or selling or transacting a stock from a specific company.
Mm-hmm. And so let's dive into that, because this is where it's a little bit different, this IPO, because it's unusual access for everyday investors with more shares allocated to retail and platforms lowering minimums. Does that signal opportunity or something that investors should be cautious about?
Yes, both. Very, very much. I think that today's access to the market is wildly valuable for all of us to be able to harness the power that is available through investment and through access to our money growing with the growth of the economy. However, there is also unhindered access, unadvised access, unmonitored access. And so people are taking more risks with money than they once were when they were working just in the capacity of having 401ks or maybe through an advisor or broker who could talk reason into certain considerations. Now, I do think that with the SpaceX IPO in particular, we are going to see a lot of additional ancillary ripple effects as a result. It's not just one company. This is the weight that SpaceX is going to have on the market as a whole. For years, we've been talking about the Magnificent Seven, or the top 10 stocks of the S&P, basically comprising about 40 to 50% of the total investment value represented across all 500 companies. There's so much weight in just a small select few. And with SpaceX Valuation, they now comprise a large weight, and they're not on the S&P 500, but they comprise a lot of weight in their respective indices, the NASDAQ. And so there's going to be a lot of mutual funds that purchase into SpaceX, because mutual funds are comprised of a number of different companies, and they're going to want in on the weighting that SpaceX might provide. Direct index funds, ETF funds that are tasks with mirroring the returns of a specific sector or a specific index are going to almost be forced into buying large quantity of shares. So there's going to be some additional demand here that is going to be interesting to see how this plays into the broader movement of not only the market, but of SpaceX in particular. But there was also a lot of liquidity pulled out of the rest of the market to create the money needed to buy SpaceX. So what implication this has and how does it weigh in a benefit or disadvantage? I don't really know here. So we'll just have to wait and see how successful this thing really is.
Right. And I mean, yes, time will tell. In regards to IPOs, though, historically, nearly 60% of IPOs since 1980 have returned zero or negative returns over 3 years. How should that shape the way investors approach a high profile IPO? And I say this, Peter, obviously the IPO has passed, but to me, this is still initial, right?
Yeah,
I mean, we're
initial.
still in the very recent
Yeah,
announcement of this.
absolutely.
Yeah.
Well, I think that SpaceX uniquely is something that we've got to look much further out into the future for. I mean, already Elon has brought the price of putting equipment into space down substantially. And he is light years ahead of his next closest competitor in getting satellites and equipment to space. What kind of economy truly is that, though? I mean, we have satellites, we've got communications, we've got surveillance, military use, government, and there's a market for that. But the true kind of experiment of what lies in the great beyond and how can we monetize this is decades into the future. What is the revenue? What is the profit? What does that mean to the shareholder? That's what we care about when we're buying a stock. And is that something that today is profitable or is going to be into the future? I know there are companies, corporations, governments, and entities that have business with satellites in space, but the data centers on the moon, the solar power from space, like, do those come to fruition? Is that a reality? It's probably not a 3-year proposition. And you're right, there's a lot of IPOs that don't pan out as would hope in that initial public offering
Right.
and the subsequent several years. But there are some that do. So we'll just have to see where this one lies in hindsight in history.
Right. But as we talk through that discrepancy, some estimates suggest SpaceX's fair value may be closer to 780 billion. How important is valuation discipline when a company has this much hype and innovation behind it?
Yeah, and this goes back to that kind of first question of how dangerous is this for individual investors? Like, there was a lot of hype, and when there's a lot of hype, the supply and demand econ 101, the transaction volume and demand for shares is part of the price. In this case, maybe more than half of the price. Whereas the actual fundamentals of the company might not justify the pricing that the demand is resulting in. And so we do need to be aware that this IPOs can be wildly unpredictable, can be volatile, and we don't really know where this thing truly is valued at quite yet. What is fair market value, and how ultimately we're going to find that point that makes sense into the future, whether it's going to be higher or lower from here.
Right. No, it's interesting to talk this through. And to me, as an investor, Elon Musk wouldn't be submitting this for an IPO, wouldn't want to be part of a public company if he didn't need the money, right? Which is, I think, significant. So for investors who don't want to miss out but are wary of the risks, what's a more disciplined approach to evaluating whether and when to invest in a company like SpaceX?
Number one, only invest money directly that you are willing to see fluctuate pretty significantly.
Right.
Number two, maybe a more probable bet would be to go with buying the sector or buying a wide variety of companies within an investment, such as an index fund or an ETF that might include SpaceX. So that's the way that I would look at this. If you're not kind of willing to put all the chips on the table on one number, you can always bet red or black on the roulette table. And it's not a perfect example here, but we are speculating some, and certainly with a infant company like what SpaceX is. Yes, they've proven that they are capable not only of doing what their job is, but doing it better than others, and advancing the technology. However, it is still very speculative. It's kind of like going to the horse race track and betting on one horse. The payout is high, but the probability is low. If you could instead just make the bet that most of these horses are going to finish this race eventually, like, that might not have as high a payout potential, but the probability would be much higher.
Right.
And I generally go with probability over high potential that comes with high risk when we're looking out 5 or 10 years into the future and trying to map a solid financial plan.
All right. Well, Peter, I will see you 5 to 10 years from today.
And we'll see if all of this is right or if we're completely off.
We'll circle
already
back
living on the moon.
Yeah. Well, it's interesting to talk this all through, Peter. I think you mentioned this in the beginning too. Regardless of whether you bought the IPO, you are probably going to be an investor if you own a 401k or an IRA or the QQQ or any other ETF. So
there's going to be some exposure.
Peter, yeah, if somebody would like to talk through, whether this fits into their plan or portfolio, or whether they have the tolerance or capacity to handle the, SpaceX IPO or another one that comes down the road, and they want to talk it through with you, what's the best way to reach you?
Yeah, give me a call, 919-300-5886, 919-300-5886. There are actually several other pretty high profile IPOs that are anticipated into the coming months. And so these are things that with new industries, there will be new companies that enter the space. And that's where we are today. But not everybody does have the stomach or the risk tolerance for that. So you need to map out your plan. It's not just finance, it's your future. You need to have an optimized plan, which is what we put together at Richon Planning for our clients, taking a look at access to the market, what investments to choose, how they will work for you into the future to generate income, what are the tax implications, bringing all of those together into a plan. And if you'd like to get that put together, we do that on a complimentary, no-cost courtesy service, 919-300-5886. Or you can visit online, richonplanning.com.
All right. Peter, thank you for your time today. I appreciate it.
Thanks, Erin. To the moon. Hey folks, Peter Richon here with Richon Planning. So glad that you are enjoying the podcast, Planning Matters Radio. One of the tools that we've put out there that people really seem to appreciate and really are finding of value is at 919retired.com. It is your retirement tax bill calculator. If you've got any kind of retirement account, your tax deferred, 401k or IRA, this is the website, this is the resource where you can go, you can plug in your own numbers, your information, you can slide the tool calculator up and down for your tax rate or your amount of savings and see what your tax bill is likely to be if you default and defer to the IRS's plan versus what you could potentially bring that tax bill down to. A lot of times it is a very significant savings. So if you have not yet, go to the website 919retired.com, run your numbers on the retirement tax bill calculator.
This has been Planning Matters Radio.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookzone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.